Good day, traders. Good morning, good evening, depending on where you're at in the globe. Stacey Burke from Stacey Burke Trading. We're reviewing the 1-hour charts on the Euro USD, the Pound USD, the Euro Yen, the Pound Canadian, and the US Chief for Wednesday, November the 18th. The Fed made their monthly announcement yesterday at 2 p.m. New York time, so there was quite a bit of volatility later into the U.S. session. But I just wanted to go over some simple things today. I just got off a Skype call with a gentleman overseas, and we were going through his charts, and I have a headache, I have to be honest. He had so many levels and bands and indicators on his charts, and and things haven't been going well. And I think when you get a lot of stuff on your charts, you get analysis paralysis, and one of the things that you've seen me focus on here on the charts is simple support and resistance. And on these hourly charts, there's three things that I look for. Number one, time of day. We've spoke about order flow and market opens for especially the London and the US sessions. Those are the main time frames that I look at trading. That's the highest times for liquidity and volume and order flow to be in the markets. Number two, I look for support and resistance. The price action that we see on this charts are large institutional players. These are huge. The longer the time frame, the more likely those levels will hold. And number three, I look for simple changes after the 2 a.m. to 5 a.m. time frame for Europe or London. We know that has a high probability for being possibly a high or low for the session, unless we're in a very high priority announcement time frame, such as yesterday with the Fed, or non-farm payrolls, occasionally interest rate announcements for other currency pairs. But what I just want to get across to everybody is you do not need to make this complicated. You do not need to try and get the high and the low and squeeze out the last eighth of every move. There's significant amount of movement every single day for you to be trapping some safe, low risk pips. The number one rule in trading is to limit your downside, and risk management is the name of the game. Being right and wrong are not part of trading. Winning and losing are not part of trading. Trading is about risk management and flawless execution of your trading system. So the simpler you can keep that, I think the more successful your results will be. So just real quickly, let's run through some pairs. We saw the Euro auction up quite strongly from the mid-morning Asian session into the first 3 hours of London. And again, 3 a.m., 4 a.m., 5 a.m. candle, we saw new highs, and then we saw an inside bearish candle. Now, when I see a situation like that, immediately I'm looking at that as a possible high for the session, at least until later into the U.S. session when the Fed comes on board. So traders who were looking to possibly trade the early part of the U.S. Open, immediately we saw a weak pullback. Now, again, just to look at colors, pink is Asia, yellow is the London session, and the blue is the U.S. market. I've got this 1 hour earlier for the U.S., and that's only because I use that sort of like an amber light, just I'm getting ready for the market to open. So as we saw this breakout, we saw a bullish pullback with an inside bar. We saw a follow through that was bearish. Now, I tend to look at the 15 o'clock candle, which is 9 a.m. New York, as my open for the session. Traders that were looking to short this market would have been looking to limit order the 67, 670 level up here, and then look for that to track down to the Asian lows. Now, as soon as that price action takes out a new low, especially with a major announcement coming on later in the evening, traders at a minimum should be going to break even. So short, there's a 40 pip trade there for roughly 1 to 3 risk, maybe even 1 to 4, depending on how traders traded that. But a really simple reverse of trend after that order flow of London opening up. Let's take a quick look at the 5-minute chart. We'll just scrunch this together. So again, we see our inside bar lows taken out at 670, and as the US came on board, you can see that the price action was staying below that price level. We saw one last push up, it rolled over, and then traders were able to short that down quite simply. So just looking back at some simple support and resistance, and even again, just from the previous day's price action, we saw Europe levels and US levels hit, market auction back down, and now obviously as we're heading in towards London Open today, possibly a new change in direction, and we may even see these levels tested now as support as London opens up. Looking at the pound, again, some price action in Asia. We saw that spike up aggressively into the third hour of trading with London, which again, support and resistance. We saw resistance from the previous day's US session come on board. The market then, as we headed into the US session, potentially was seeing support at that 52.05 level. Now, as traders, we'll looking at the hourly chart. Now, we don't know if that level is going to hold. So on the hourly chart, that would be a fairly aggressive move by anybody. But again, traders may look at this first bullish candle of London as an area to buy and place a stop loss underneath there. So we've got support. The market broke out. We see that there is some indication of support prior to getting into the Fed announcement. But we'll go to the 5-minute chart and take a look to see what that looked like. So as we went in, we saw the market spike up into London. It auctioned down. You can definitely see as the US session opens up, there's definitely an indication of support. Now that weakens, but we've got buying definitely underneath of where that announcement spiked up during London. Traders were auctioning that back up bullishly, so there was evidence of buying coming in there. Market capitulated to retest lows, and then as the Fed came on later on. Now, personally, there's nothing clean on that chart to me that was tradable. Other traders might have found that that was a tradable trade for them. That's not the type of simple setups that I'm looking for. And we're going to see one next on the US Swiss. That's a lot cleaner. Now, again, just looking back from the previous day, you can see that there was definitely bullish activity underneath the 5200 level. Now, smart traders, the more medium to longer term traders, may have been looking at anything in that 5200, 5215 area as a buy signal, and their stops would have been underneath the big institutional candle from Tuesday. Okay, let's look at the Swiss. So the Swiss franc, if we scrunch this up, you can see has been trending quite strongly the last 4 or 5 days, and more so over the longer term the last couple weeks. So as we headed into the London session yesterday, you can see Asia sold off quite heavily. Now this is a great opportunity again for people who want to stay with the trend. We see our 3 a.m., 4 a.m., 5 a.m. candle, so potentially a low setting up for the day. We've got a high probability, low risk trend trade resuming with the bullish trend to get back into that market. Now for traders who are waiting for that US session, we'd be looking at that first opening bar from London as a possible area of where price action will change now. If that selling's been breached now, these sellers can potentially become new buyers. That opening price now could be a one candle stop, so if you were to go long on the break of that candle or long off that opening price, you'd be wanting to have a 1 bar maximum stop. So heading into the US Open, we saw it break out quite strongly, an open drive that just continued into the US session. We saw that the Fed announcement, a bit of volatility, and then the market has gone sideways, and as we see with Asia now, that's coming back to retest these levels. So we'll have to see again when London opens up what happens today. But we'll just scrunch this up and look at the 5-minute real quick. Okay, so again, just looking at some real simple basic concepts with price action. We'll just reverse this for a second and clean that up. Okay, so with Asia, we saw the market bullishly break out and then auction down to new lows. When we see the market start to auction its way back up into the US session, first thing we want to do is just look at some real basic support and resistance. We know that there was selling that came in at this level. So as the US opened and then came back and started to auction up into the bullish direction, where these sellers have their stops, we'd be looking for the market to quickly accelerate, because once those orders are hit and filled, the next place the market will go to seek order flow is above here. At the open like this, when we see that aggressive activity, which we did, we saw the market at least retest the old highs, which again, when it takes out the new highs, you'd want to be going to break even. New highs, new lows are the highest probability for failure. Most breakouts fail. So again, one of the reasons we look at market opens, because order flow tends to carry momentum in one direction for a while. Keeping things simple, the market auctioned up heavily up into the 215 level, and then sideways into the Fed, but a really simple trend trade with medium to long-term traders. Other time frame traders have obviously entered the market here and driven that Swiss franc upwards. So just keep it simple, traders. We'll look at the Euro Yen one more time. Again, simple. First 3 hours of London, 3 a.m., 4 a.m., 5 a.m. So potentially now we have a high for the session setting up. We have an inside bar. The market did not break out of the inside bar heading into the US. So the difference between that and the euro, of course, is that the euro broke out and then retested the Asian lows. So in this particular case, the inside bar, the wick did break, but price action itself closed in range and the market auctioned sideways. Personally, I wouldn't be on the screen that long. I'm looking for something to happen right away that is going to bring us back down. And going long, we know that this potentially could be a high for the session in that first 3 hours, so I'd be very reluctant to take anything differently. I wasn't trading the announcement, but again, for traders who were trading the announcement, when the Fed announcement bar closes, what's critical about this is that if that was to fail, if that price level was to fail, this next candle after the Fed would not have closed back in that range. As soon as that candle came back into range, the only place that this had to go, as we can see with these probes, it was testing to see if there was more buyers up above. The market just continued to move up, fill those orders. Those stop loss orders now are rolling over and becoming buyers. More buyers pulling in, and we now have a big move up. So no bands, no levels. These are hourly charts. It's not like you got to make a split decision. You're keeping it simple. You're looking for confirmation from price only. You're looking for high probability times to be trading, and you're looking for the market to do the work. So keep it simple, traders. Study these charts. There's recurring themes here. Keep it simple. Keep your risk tight. Try to buy low and sell high. Always manage your downside. Keep it simple. Have a great day, and I hope you got some value out of this session. Thanks, traders. Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.